Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like and subscribe and hit the bell notification button so you don't miss the latest cryptocurrency news. Let's get straight into it today. Today we are streaming to YouTube, Twitter and Binance Live. So if you are on any of those platforms, make sure after today's stream to go to cryptosavingexpert.com and sign up to get that completely free cryptocurrency content. We have the latest cryptocurrency prices here on the website at Crypto Saving Expert as well. So let's just refresh the page to make sure we've got all of the up-to-date prices here. We have Bitcoin sat at 26,758, down 1.73% in the last 24 hours. And we have Ethereum down 1.9% to $1,870. So at the end of today's stream, we will be analysing the price of Bitcoin, taking a look at that chart and looking at some indicators as well. But first, we need to take a look at what has been happening in crypto. And there's been a lot of big news over the weekend, and I'm pretty impressed and pretty happy with this first one here. So let's take a look at this and see what has been going on. First of all, let's check everything's working correctly in this stream. So let's talk about the SEC's power because it's been taken away from them. So there's been a draft bill and it clarifies the SEC's powers over crypto. Now, I always bang on about the regulation of cryptocurrency in these live streams. I'm a firm believer that we need regulation, but we need to make sure it doesn't stifle growth of the industry. And in the US, we've seen the SEC trying to regulate cryptocurrencies, accusing different exchanges of offering unregistered securities, accusing different projects of being securities when they may not be. And all in all, the regulators in the US are trying to use the Howey test to determine whether an asset is a security or a commodity. The Howey test was created in the 1940s, and it doesn't work fitting this old model onto new technologies like cryptocurrencies. So I'm a big advocate to try and get cryptocurrency-based regulation, but get the regulation created around the technology. Don't use old regulation and try and put it on the new industry. So I'm very much in favor of seeing new bills where we push for clarity on crypto regulation in the US and start to move forward on this. So let's take a look at what's happening in this article here. We have draft laws submitted on the 2nd of June would prevent the SEC from classifying decentralized crypto assets as securities and hand complete control over to the regulation of digital commodities to the CFTC. So let's take a look at this article here. Now, this was submitted by the House of Representatives by 2 Republican committee chairmen, and they claim that the current crypto regulations fail to protect consumers. Now, this is what we have been saying. We need regulation, and FTX proved that in November last year. We saw a massive cryptocurrency exchange fall apart because it wasn't being run correctly, and regulation could have helped this be identified much earlier. And that is showing that consumers of cryptocurrencies are not being protected by the current regulation. So we can see here, the proposed laws set clear guidelines on the jurisdictions of the SEC and the Commodities Futures Trading Commission and define what classifies a digital asset as a security or a commodity. The SEC would be asked to rewrite rules modernising the regulation of certain digital assets. Now, this is exactly what we've been calling out for on the cryptocurrency, especially here on these live streams. We talk about cryptocurrency regulation all day, every day on these live streams. I feel like I blabber on about it so much, but it's just so important to get this right to help the industry grow. We have heard from different main big actors within this space. We've seen Brian Armstrong really pushing forward with clarity around. He's been fighting to get clarity around the regulation in the US for a long time now. We've also heard from Michael Saylor. Now, he believes that there's a lack of clarity around the regulation on purpose. The SEC want to have that flexibility to come after certain cryptocurrency products, according to Michael Saylor. So there's a big debate going on here, but at the end of the day, we just need clarity so that these cryptocurrency companies can continue to grow. The SEC has been targeting many different cryptocurrency exchanges within the last couple of months. And this has really been stopping growth of the industry. And these cryptocurrency exchanges are starting to throw their hands up in the air and saying, you know what, we just can't operate in the US anymore, or we need to start to divert our focus into other regions where the regulation is a little bit more clear. And what's going to happen here is the US is going to fall behind unless they create this clarity around the regulation. So we can see here the SEC and CFTC jurisdiction. The bill, the Digital Asset Market Structure discussion draft, outlines the responsibilities of the two regulatory bodies, the SEC and the CFTC. Digital commodities are under the remit of CFTC, while digital assets offered as part of an investment contract are overseen by the SEC. And the Act legalizes the secondary trading of digital assets, even if they are initially sold as investment contracts. So fully decentralized assets classed as commodities. The draft bill outlines the requirements for a digital asset to be considered a commodity. Now, commodity assets are part of a truly decentralized network and are considered functional under specific criteria defined in the Act. So the transparent process is set out to allow creators of digital assets to certify their network as decentralized. And this is something we need, right? We need clarity on this regulation and we need transparency. Cryptocurrency companies are not fighting against the regulators, which they're trying to work with the regulators. Cryptocurrency companies don't go out there and say, do you know what, I'm just going to ignore all of this regulation and I'm just going to operate here until they shut me down. Cryptocurrency companies like Binance, like Coinbase, they are trying to follow the regulation because they want to be able to operate in the jurisdiction. They don't want these big fines. They don't want these big lawsuits like we've seen between Ripple and the SEC. They just want to operate and provide a service for their users. So they want to have clarity and transparency around the regulations so they can continue to offer those services. And if we don't get that clarity, as I said, these companies are going to begin moving out of the region. So we can see here that they are really looking for a transparent process which will allow creators of digital assets to certify their network as decentralized. Now, that would make it so much easier. Now, the project must not have a defined head of operations, and no one entity should own over 20% of the assets. The SEC may object to the certification if the SEC determines the certification is inconsistent with the Act, but must provide a detailed analysis of its reason for doing so. So that transparency is going to just clean up the space so much. Because if every single cryptocurrency asset. So for cryptocurrency exchanges, the main problems are that they are getting accused of offering unregistered securities, but cryptocurrency exchanges may now just say, if you can transparently follow this process here, a transparent process is set out to allow creators of digital assets to certify their network as decentralized. This means if the projects do this, they can be listed on cryptocurrency exchanges without cryptocurrency exchanges getting in trouble. And that is what we're talking about here. That transparency and that step-by-step process to prove that your asset is a commodity and not a security is something we definitely need within this space. That will just clean up the industry so much. It will make it so much easier to regulate the industry, and that is all we've been asking for. We're not asking for a lot as a cryptocurrency industry. We're just asking for clarity and transparency so that we can work with regulators and clean up this space. We don't want to be in this sort of Wild West industry where regulation says this thing one minute and another thing the next, where it's really up to the Howey test and different people are classifying these assets as different things every single day. One day Ethereum is a commodity, next it's a security. It doesn't make sense. We need transparency on how we are making this divide, and we need clarity on that so that these projects can continue to build and work forwards. The cryptocurrency industry is a brilliant new technology and industry, and we want to continue to see it build. We don't want the US to fall behind. So that is what we are seeing here, and the project must not have a defined head of operations. So these, it's very similar to the Howey test in this sense, but it's just adapted more to the cryptocurrency industry, and that is all we've been asking for. So it's been, what I would say, a pretty nice week to see weekend to see this bill be introduced, and hopefully we will continue to push forward with things like this to help regulate the cryptocurrency industry a little bit better. Apologies to those that aren't fans of listening about cryptocurrency regulation. I will hammer on about it for months and months until we hit that end goal of having a clarity around the industry. Digital asset trading platforms. According to the draft laws, crypto exchanges referred to in the draft as digital asset trading platforms can register as alternative trading systems, and the Act would prohibit the SEC from denying a trading platform from an exception to operate as an ATS on the basis that the platform trades digital assets. So the SEC will be required to rewrite their rules to permit custody of digital assets by broker-dealers and modernize other regulations for digital assets. So this is really pushing against the SEC's attack attack on cryptocurrency. So additionally, before listing digital commodities, DCEs would need to certify that with the CFTC that the digital commodity is not readily susceptible to manipulation before being listed to trade, including considering its availability, structure, functionality, and public information. So in the proposed framework, DCEs must keep customers' assets segregated and act as digital commodity custodians, and customer assets will be protected by CFTC standards for supervision. Customers of future commission merchants will be given bankruptcy protection laws. So this is really pushing against that FTX collapse later last year. Now, the bill is drafted to spark meaningful debate, and that is exactly all we need. We just need these conversations to get started. Now, Coinbase has been pushing for new cryptocurrency regulation, and the SEC have been saying, do you know what, you've got it, it's fine. The cryptocurrency regulation is already in place, and we're saying it's not there, it's not clear, and it's not transparent. So seeing this bill being drafted is really just starting the ball rolling, and that is all we have been asking for. It's the first step in the right direction. But let's move on from this now, because I could blabber on about that for hours and hours and hours. Let's take a look at the next article here. We have Atomic Wallet users lose millions of dollars in mysterious exploit. Now, Atomic Wallet is a pretty long-standing wallet. And we have seen, I believe it's less than 1% of users having their funds drained, but some users have lost a substantial amount of cryptocurrency here. So this self-custody, decentralized crypto wallet was compromised, resulting in users complaining that their funds have vanished, some with no transaction history or hashes. And the team behind the wallet informed the public on the 3rd of June, disclosing ongoing investigations. So according to the tweet, Atomic Wallet received reports of the hack and have been analyzing the incidents. Some users reported losing specific tokens, some lost their entire crypto portfolio, while others were unaffected. And the root cause of the attacks are unknown, but the wallet team have contacted major crypto exchanges and blockchain analytics firms to recover the stolen funds. So what happens now is the funds have been stolen. Because the blockchain is decentralized and transparent, we can track where those funds are going. Now, when we track where those funds are going, if the hackers choose to try and transfer those cryptocurrencies into fiat currencies using centralized exchanges, the centralized exchanges can just block those transactions and keep those funds, giving them back to Atomic Wallet to distribute back towards those users. So this is how we try and deal with malicious actors within the space. Obviously, that is only available when it really gets to centralized exchanges, once again, those funds. But let's take a look at this. The Atomic Wallet team have said the investigation is still ongoing in a joint effort with the leading securities companies. The team is working on possible attack vectors, nothing yet confirmed. So support team is collecting victim addresses, reached out to major exchanges and blockchain analytics companies to trace and block the stolen funds. So sharing updates about the hack, on-chain sleuth Zach XBT disclosed that the losses ran into 6 figures across different chains. So if we take a look at this tweet here from Zach XBT, we can see some things to note about this hack. Largest single victim I have observed is for 2.8 million USDT. So multiple other losses of 6 figures across different chains. Now that is a huge loss there for many different users of the Atomic Wallet. Now the largest individual we can see here on Sunday, we've seen a more recent tweet from Zach XBT. So this was posted on the 3rd of June. On Saturday, we can now see that a largest victim was found on Tron with 7.95 million USDT stolen, and the 5 biggest losses account for $17 million. Now, a lot of people would have thought that Atomic Wallet was a wallet to trust. Now, obviously, this is a wallet that's been around for a while and has still been susceptible to hackers, and we need to consider this. Now, with cryptocurrencies, we are taking control of our own funds. Instead of holding our tokens in or our money within the banks, we are taking control of that and looking after that ourselves. When we are doing so, we are trusting the code of the wallet we are using. Now, we all say not your keys, not your crypto. We need to keep our cryptocurrencies off, private keys offline. We need to use decentralized methods. We need to move away from centralized exchanges and use hardware wallets and things like that because they have much less risk. But we have to understand that they are still susceptible to risks. They are still a piece of code that is holding our funds. If somebody, a malicious hacker, managed to see a bug in that code and manages to take advantage of that, exploit that bug and drain accounts, that is still something that can happen with hardware wallets as well. So when we say diversify, we don't just mean move from centralized all into one hardware wallet. We just need to be careful and just spread out our funds. Don't just use one single wallet, because you can see with wallets, even like Atomic Wallet, which is a self-custody decentralized cryptocurrency wallet that has been around for years, we still have our problems within the cryptocurrency space. We are new into the industry. This is still a new industry. We are not too late to get involved, but with new industries comes new problems, and we need to continue to fight these battles. But we just don't want I don't want our viewers to be the people that fall behind and face these problems. Obviously, if we diversify across multiple wallets, then we have a bigger spread and less risk, because we don't want to have all of our portfolio in one wallet where it could go incredibly wrong. So let's take a look at the next one here and see what else is going on in the markets. Let's move on from that. Hopefully we've got some more positive news in the markets today. We should have done the first two pieces in the opposite order. Let's see what else we've got here. This one's not so great. Bitcoin selling pressure is coming from Bitcoin miners, according to a report here. So Bitcoin selling pressure around $28,000 could be due to miners selling their freshly minted Bitcoin to cover operational costs. So mining has also become very competitive, cutting into their profits. Bitcoin difficulty breaking the $28,000 price ceiling since mid-May could be due to miners selling their freshly minted Bitcoin to cover operational costs. This theory was shared by the team at Matrix Port, who added that Bitcoin miners are being forced to sell their Bitcoin as profit margins have decreased over the weeks. At the same time, Bitcoin mining has been very competitive as a result of mining difficulty continuing to rise to all-time high levels. So what happens here? When we're mining Bitcoin, we're essentially every single cryptocurrency miner is trying to create a hash which is lower than the target value. If there's lots of computational power being put into Bitcoin mining, the difficulty increases. And that is because we want to keep around 10 minutes between each Bitcoin block. So if the difficulty is really, really easy, we'll have too many blocks all at once. So that difficulty of mining changes depending on the amount of miners or the amount of computational power being put into the blockchain. And what we can see here is that it's become very, very competitive over recent weeks, and therefore difficulty has increased massively, therefore needing more computational power to complete the puzzle, therefore requiring more energy, therefore more inputs. The costs to provide the energy is increasing. And therefore, the difference between the amount of money going into these mining rigs compared to the amount of Bitcoin coming out is getting slimmer. So those companies need to start selling their Bitcoin in order to realize some of those, counteract some of those losses from their inputs into this machine. So we can see here that $28,000 could break if Bitcoin's 200-week moving average holds as support. We will be taking a look at that at the end of today's stream. Don't let me forget to take a look at that 200-week moving average. In fact, I'll put that tab at the end so we do not forget. Let's take a look at the next article here. I am aware that we've ran on for a while in this video, so we'll start to run through a couple of articles and then we'll get onto the price of Bitcoin there. So Kenya's central bank says CBDC issuance is currently not a priority. So they've deferred the adoption of CBDCs. I bet a huge amount of people are cheering in Kenya right now. A lot of people are very much against CBDCs because it allows the banks to control our funds. We could have expiration dates on our money. We could have limitations on how we can spend our money. It is programmable money at the end of the day, and we do need to be careful. But let's take a look at the next one here. We have Binance won't get into crypto mining involving actual hardware. So CZ said that Binance would not directly get into Bitcoin mining as the exchange is unfamiliar with the industry. However, he acknowledged that Binance operates one of the largest mining pools. Now, CZ has said last week as well that he was looking at acquiring a bank, but he didn't see the benefits and he doesn't like the business model. It seems that CZ knows what kind of business he likes to run and he doesn't really like to defer from that. He knows that he's a successful cryptocurrency exchange owner, so he doesn't want to try and move into different industries that he's unfamiliar with. He should just continue running with the one he's got and hopefully continue to make Binance a success. Binance is definitely one of the companies that is helping drive adoption of the cryptocurrency industry because it makes it incredibly easy for new people to get into the space. But let's keep an eye on that one. So they are involved in cryptocurrency staking pools and mining pools, but they're not actually involved in physically buying mining rigs and starting to mine cryptocurrencies themselves. But let's take a look at the next one here. Brazil's largest crypto exchange, Mercado, bags payment institution license. So the new license allows them to launch its fintech solution, MB Pay. Mercado Bitcoin, the largest crypto exchange in Brazil, has received a license from the Central Bank of Brazil to operate as a payment institution issuing electronic money in the country. So according to a report, the license was issued by the Department of Organization of the Financial System, and they will officially launch MB Pay, the payments and digital banking division, which has garnered 4 million users already. So that's a big push there for crypto adoption in Brazil. If you want more information on that, please don't forget to go to cryptosavingexpert.com, the most reliable cryptocurrency news out there. If you do go over to the website, don't forget to press this big blue button at the top here, create an account, and today is Monday, so if you manage to do this today, make sure to tick this box here as well, and you get access to our newsletter every single Tuesday at 11 a.m. BST time, so that launches tomorrow. A lot of work is going into that today, and we always make sure to do our Bitcoin analysis as late as possible, so it's the most accurate when you receive it in your inbox. So don't forget to go and create an account there and press that big sign up button, and you get access to all of these amazing free cryptocurrency courses as well, and there's lots of information in there. The team have been working very, very hard on this. Now, before I forget, please don't forget to like and subscribe and hit the bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single weekday, talking about what's going on in the markets and analyzing the price of Bitcoin as well. We will be analyzing the price of Bitcoin at the end of today's stream, so make sure to stay tuned until then. Let's take a look at what is going on here. The rise of AI has made US stocks more attractive than crypto. So what we can see here is there are 3 main points that we have here. Let's take a look at what's going on here. So the Bluefin team have said the rise of the concept of AI has made speculative liquidity more inclined to choose US stocks rather than the crypto markets, as one of the macro trading tools and the macro fundamentals faced by Bitcoin have not improved. Now we can see here that we also have crypto spot trading volume drop to December 22 levels. Market volatility in May is usually higher than in April, as lots of macro data and major economic meetings decisions are typically released in May rather than April. The law was broken in this year. The resolution of the debt ceiling and the arrival of interest rate peak was already priced in. Now we can also see that they've said in the absence of new expectations, investors' enthusiasm for trading has decreased significantly and investors tend to wait and see. A small amount of liquidity will not relieve the drought in the crypto market before the end of the interest rate cycle. We still have to wait. So let me know what you think on this debate. Let me know in the chat or in the comments, depending on what platform you are on. We're currently streaming to Twitter, YouTube, and Binance Live. So if you are new around here, make sure to go to our YouTube channel at Crypto Saving Expert and give us a subscribe. And make sure to go to our Instagram and our TikTok as well, Crypto Saving Expert, where you can learn about the latest cryptocurrency news in short form content as well. Let's take a look at the next one here. Coinbase's CFTC regulated derivatives exchange to launch Bitcoin and Ethereum futures on the 5th of June. Now, we did know that this was about to be launched. Now, this is based for non-US citizens, I believe. If you want to check out more about this, make sure to go to cryptosavingexpert.com. We've got more news to come here, and then I want to take a look at the Bitcoin price as well. So I'm trying to run through these quickly now. We have crypto firms proceed with caution in Hong Kong as licensing begins. So Hong Kong decided they want to be a cryptocurrency hotspot, and they've really ran with that mission. Banks are looking to work with cryptocurrency companies within the region, and cryptocurrency companies are moving into the region pretty quickly. Now, they have said that the regulation is still going to be strict. They're not going to be lenient on this, but they are looking to help cryptocurrency companies grow within the region, and they are going to work with them, be transparent, and provide clarity around their regulation, which is something that we've been lacking in the US. And this, I think, is starting to scare the US a bit. The US is seeing that China and Hong Kong are looking to push forward to crypto all of a sudden. And the US are like, we need to sort this out. We need to play catch up. We need to create some clarity around our regulation because there is a bit of a battle going on there. Let's take a look at the next one here. Federal Reserve orders Silvergate to submit its liquidation plan. So the Federal Reserve has ordered the crypto bank to submit its liquidation plan within 10 days. Now, this is one of the banks that unfortunately fell during February or March this year. It caused a catastrophic effect on the many, actually, no, it didn't. That was a complete lie. It did not cause a catastrophic effect. It caused the prices of cryptocurrencies to move to the upside because people realized that they can't trust the banks. So let's move on to the next one here and see what else is going on. The real Bitcoin bull market will begin in late Q3 and Q4. I feel like I've not taken a breath in a while. I feel like a commentator on a horse race. What we can see here is the Bitcoin bull market will begin in late Q3 and Q4, according to Arthur Hayes. Now, this is something that I can agree with. I've been saying here on these live streams a lot that the Bitcoin halving is not till April 2024. Now, we did see a massive move to the upside earlier this year. It was like something happened at the shift between 2022 and 2023. All of a sudden, all of the negative energy in cryptocurrency disappeared, and we just started to move to the upside amazingly. We did see a massive move to the upside, and I've been saying now since we've moved up to these levels, things might get a little bit boring. Typically, if we take a look at the 4-year cycles, we don't see a new all-time high until after the Bitcoin halving. Now, if we were to follow that same pattern again, we won't see a new all-time high until after April 2024. Now, if you are a believer in the 4-year cycles and you understand that pattern, that kind of puts a cap on where we can move within the next couple of months. Now, we did see a huge percentage rise at the start of the year, if we get this right. So we started down at 16,500. We've already seen an 87% increase for Bitcoin. Now, if we were to see the same thing again from the current point, we would have to see a rise all the way up to $50,800. Now, I'm not saying that's not impossible before the next Bitcoin halving. I'm just saying that was a rapid increase within a very short period of time. And for us to see that again, we're getting very close to breaking that 4-year cycle. So I personally believe there's a low probability that that is going to happen just yet. If we take a look at what else he is saying then, Arthur Hayes is feeling very positive about what could happen at the end of this year. I do also say that, yeah, the markets are slightly boring right now. We are sticking within that range, but that's a really positive thing. We're building supports. And I would also add that if we take a look at the 4-year halvings, the year prior to the Bitcoin halving is typically net positive. So although I'm not saying we're going to moon right now, I'm saying I believe that we could moon in the future after the Bitcoin halving. And until then, things won't be that bad. We will probably, historically, we have seen nice moves to the upside. I'm just not expecting massive gains from Bitcoin just yet. But I am a long-term hodler, and I do believe that we could see a nice move to the upside in the long term. I am just all I'm saying is be patient. Let's take a look at the next article here. So scientists propose a new quantum proof of work mechanism for blockchain consensus. So a team of international students say that proof of work consensus by quantum sampling is dramatically faster and more energy efficient than the original consensus mechanism. Now, that energy efficient point there is the point that will probably catch a lot of attention. If you want to know more about this, make sure to go to cryptosavingexpert.com. In fact, I'll put the link for this article in the chat there. If you want to learn more about this, then you can do so. That is not the link. Let me try again. Copy this. Let's try one more time, and then we'll move on to the final article of the day before we take a look at the price of Bitcoin and do some Bitcoin analysis here as well. So right now, let's take a look at this one. Bitcoin miners are likely selling their Bitcoin bags around $28,000. This article, or the analyst in this article, has said that Bitcoin is currently holding the 100-day moving average, and it is holding the 200-week moving average. So let's take a look at the 200-week moving average. Let's go to BTC USD here, BTC USD, and then we want to go to the weekly chart, and we can take a look at the moving average here, and we want to take a look at the 200-week moving average. So inputs here, and then 200. So we can see here on this chart, we are definitely currently above this 200-week moving average. We did close the week above that level once again. We are looking like we are retesting this. So if we take a look here, you can see we've used this as a support multiple times. So you can see back here that it has been used, and then again here and here. Now, we have unfortunately fallen below that within the last couple of months, and we have used it as a resistance, but we are back above that right now. So hopefully we continue to use this as a support, and that would make us all feel a lot better about the markets, in fact. So Let's take a look at the smaller time frames now and see what else is going on here. So let's check that everything is running smoothly. I know that my stream is going to have run out of time on Twitter, I think. Let's take a look at what else is going on with the price of Bitcoin. Let's do some Bitcoin analysis here. In fact, let's first take a look at the CME gap because it is Monday morning. We can see here on the daily chart for Bitcoin that the CME gap, to be honest, there wasn't really one here. If we take a look at the hourly chart, so the CME gap was, let's find this, from Friday to Sunday, the price of Bitcoin barely moved overall. So this is the price on Friday where the candles, this is the closing candle on Friday, this is the opening candle on Sunday. There was some volatility there, but overall no CME gap to question, so nothing to be concerned about this week. Let's take a look at the next one here. Let's take a look at BTC USDT and see what else is going on with some levels of support and resistance. We're back within the support zone between 26,600 and 26,900, waiting to see if this can hold as a support once again. If we take a look at the 4-hour chart, you can see that we have used it as a support multiple times right now, but we just need to hold this one strong. We are retesting this though to the max. Bitcoin is retesting this over and over again, so we'll see how this plays out. We need to keep an eye on this. If we manage to see a nice big bounce, I'm looking again up at that $27,700 level. If we start to see a fall to the downside, then maybe we should be looking at these zones down here at $25,860 as well. But as I keep saying, it's not necessarily a negative thing if we do start to move to the downside. If we manage to use some of these levels as a level of support, this one specifically, that $25,204 level, this big pink line here. In fact, let's change the color of that to yellow. I've already used yellow about 50 times. Green. That could be a really nice level of support there. Now we've used it here and we've used it here, and in fact some people may even call this an inverse head and shoulders pattern. That wouldn't be too bad, would it? That would have a very nice bullish price target. So coming back down and testing some previous levels of resistance and using them as a support is definitely something that I would think is bullish in the long term. Now we may see some drawbacks in the short term, but it's what I like to see. I like to see us using these levels of resistance as a support once again, because it creates that foundation. If something else is to go wrong in the future, we know we then have those solid levels of support below us. But that is all we really have for today's stream, so thank you very much for tuning in. As always, I hope you have enjoyed. Please don't forget to like and subscribe and hit the bell notification button, and I will see you all back here tomorrow at 11 a.m. BST time for the latest cryptocurrency news. Don't forget to tune back in there.